Imagine spending $1 million on investment fees. It seems crazy, doesn't it? There are so many things that I would rather spend money on than investment fees, and yet there are many Canadians who will spend this much money or more on investment fees over the course of their life. If given an extra $1 million, what would you spend that money on? Probably not investment fees. I would probably spend that money on a vacation, a reno, a cottage, a new car, or 100 other things before spending that money on investment fees. But for a mutual fund investor in Canada, high investment fees could easily add up to $1 million or more. If you don't believe me, or you just want to see the detail, let's take a look at the numbers together. So in this example, we've got a client who is currently age 35. They've got an account that's worth $113,000. They've done well, so in the past they've had average returns of 6.74%. This is despite having investment fees of 2.54%. And what we want to do is we want to focus on how this account is going to perform in the future and how much investment fees are going to add up over time. So let's focus on the charts here. So we'll zoom in a little bit. Now this first chart, it represents the historical. So we've got the contributions for this person's account. This client's done well. They've maximized their TFSA every year for the last 10 plus years. And they've got a total of 113,000 within the account. So they've done quite well. Now if we go down and look at investment fees, so with 2.54% investment fees every year, this year with 113,000 in the account, they're going to have total investment fees of nearly $3,000. Now at the beginning, investment fees were quite small, so as they were adding to the account, investment fees were a couple $100 a year. But as the account grows with investment returns and with additional contributions, these investment fees end up being quite high. So already, after 10 plus years, $113,000, investment fees are now almost $3,000 a year for this client. And this is just going to get worse in the future. So we go down now to the next chart. We've got the investment fees and the contributions and withdrawals and the account balance going forward. So here we've got the account balance and the contributions withdrawal. So if this client simply continues to max out their TFSA until age 65 when they plan to retire, they're going to have close to $1 million in their account. So a little over $1 million in their account at age 65. So that's amazing. That's a great plan. And then at that point, they're going to start withdrawing, and they might withdraw 40,000 or so per year, adjusted for inflation. And so that'll go up as inflation goes up as well. So the account's actually going to peak a little bit into retirement. They might have 1.06 million, and then it starts to decline later in retirement as they make investment withdrawals to support retirement spending. So, I mean, this looks like a great plan. But if we look at investment fees, we can see that investment fees, of course, they follow the same path as the account balance. So as the account balance grows with contributions and with annual returns, investment fees also go up. So this year they're going to be $2,800, so the same that we saw above. But then as the account grows, it's going to continue to increase. So at age 55, investment fees are going to be $13,000 a year. At retirement, investment fees are going to be $25,000 a year. And remember that they're only withdrawing $40,000 a year from the account, so investment fees are almost equal to their annual withdrawals. Now, of course, investment fees also peak a little bit later into retirement. So at the peak, investment fees are $26,000, $27,000 per year. And then they start to go down as the account balance declines. So that's per year. These are annual fees. But let's take a look at what that looks cumulatively. So this chart shows both the account balance. So we can see the account balance going up over time with contributions. Then it peaks around retirement. We've got 1 million, and they start withdrawing for retirement income, 40,000 a year adjusted for inflation. And what we want to now look at is, how do investment fees look over time? So this is the cumulative amount of investment fees that this client will pay over time. And so at the moment, they've paid a total of, by the end of this year, total of 17,000 in investment fees. That's going to go up. So at retirement, they're going to have about 365,000 in total investment fees. So that's on an account of $1 million. They will have paid $365,000 in total investment fees at retirement. But this just continues to grow. So investment fees, because in retirement the account balance is at its peak, investment fees just continue to add up. So actually, at retirement, only a third of the investment fees have been paid so far. And by the end of retirement, this client in this example will have paid a total of $1.2 million in investment fees. So at 2.54%, an average rate of return of 5% after fees, this client will have $1 million in their account. It might peak at 1.06 million. But by the end of their plan, by the time they reach their late retirement, they will have paid $1.2 million in total investment fees. And what's interesting is that actually by the time they retire, they've only paid about a third of that total amount. So 2/3 of their total investment fees will come after retirement. So as much as we want to focus on investment fees before retirement, investment fees after retirement are also very important. So we know investment fees are important, but how do you figure out how much you're paying in investment fees? Unfortunately, they don't put that information on the statement, likely on purpose. So you do have to do a little bit of research to figure out what the fees are you're paying on your different investments. So what we want to do is we want to take the name of the fund in the investment account, and we want to go to morningstar.ca, and we're going to type in the investment name. And so in this example, we're going to use the RBC Select Balance Portfolio. And there might be a couple different fund types, and we're not sure which one it is. So we're going to click on this. It says 5 more mutual funds. And what we want to look at is we want to look at the different types of funds, and to figure out which one we have, we're going to look at the price of the fund on the statement versus the price of the fund here on Morningstar. So looking at the statement, we know that we have $29 or so for each unit. So we know that it's likely the RBC Select Balance Portfolio A. So it's not the USD fund, it's probably the Canadian fund. And so we're going to click on this one so that we can see what the MER is. So we can go down a little bit here, and the MER on this fund, so the management expense ratio, is 1.95%. So every year, despite how the fund performs, investments in this fund are going to be charged a fee of 1.95%. So on $100,000, if you've got $100,000 in this fund, you're going to lose $1,950 to investment fees every year. So what you can do is you can go through each of your funds on your account. You can get the MER by going to morningstar.ca, and then you can multiply the MER by the balance in that fund, and you can figure out how much investment fees you're actually paying on your investment portfolio.